He says, beware the retest. He says you're going to get a retest of the December lows. 2,600 to 2,650 is your sell signal on the S&P.
Yeah, so he's giving you a pretty nice range, right? I mean, what he's giving us is exactly what he was talking about just last week when he was talking about rolling bottoming. He said there was a rolling bear market. Now he said rolling bottoming, and that's exactly what we're looking at here. He also talks about those are opportunities. If you get down to that level of retest, those could be opportunities, though, Scott. He even points out the specific sectors that he's isolated on and in which you'd want to put some of that money. So this is a guy who's been right, so we always like to follow that kind of a lead, but it makes a lot of sense as well right now, because will we see earnings growth the way everybody maybe either is anticipating or hopefully maybe expecting, but are we able to actually execute on that? That's going to be the interesting thing.
According, Joe, to him, you may get no earnings growth at all. Right? You may get an earnings recession, which is going to, in part, drive this retest.
Yeah, well, the market has priced in, I think, expectations for mid-single digits in terms of earnings growth.
We haven't priced in negative earnings growth, right?
No, 100%. You're correct on that. So I thought Mike's note was thoughtful. Listen, I've said all along, I believe the bottom's in. I believe the top's in. On Friday, the market, the S&P got up to 2596. Everyone sees this 2600 to 2630 area as acting as significant resistance. That was the support from the fall. So I think everyone kind of sees that coming. I think today's an interesting day, Scott. Financials, yes, they're rallying. I think Citigroup, the conference call was a very good one. But I think we've had this pattern in January where you could buy the down open, and by the end of the day, you were rewarded for that. Let's see what happens today, because it doesn't look like it's coming back with that strength that it has in prior days so far in January.
So, Rob, what about this call? Are we going back to get a retest of these December lows? We've come a long way from the December lows. Mike Wilson says this bounce is not over, right? You go 2,600 to 2,650. So you got 50 to 70 points left in this run, according to Wilson. And then it's a run for the hills because you're going back.
Well, I think what he was trying to say is it's going to go back, and then we'll go back again from there. But when I look at it
it's not going to be instantaneous. It's not going to be like, hey, let's all watch it go down and come right back up.
So the way I'm looking at it, and I kind of talked about it before, is take advantage of opportunities now. I agree, the cyclicals, the industrials, if they go down to retest the low, they will be lower, but they're much lower than they were 3 months ago.
So you don't think it's too early here to buy the cyclicals?
And what I'm doing is I'm going in with positions, if it's new money, not in full positions, but buying the really high quality companies that I want in these areas like the industrials, the cyclicals, the financials. And if we do get a retest, I get to add more. But if we don't, then I have somewhat of a position as we go forward when I get a little more clarity into the future.
How about that, Doc? You wait or you buy now? You wait for a pullback. Do you even agree? Do you even agree with Mike Wilson?
I think it's
not the gospel. It's not in stone. I mean, it's
but he's been a guy who's been right.
Yeah, it doesn't make you right every time.
He's a guy that's right. And I believe when you and I had this discussion and you asked all of us around the desk, first trading day of the new year, is the bottom in, guys? Is the bottom in? And I said, we could easily retest. And again, Mike Wilson has called this much better than I have. But as far as that retest, I said, yeah, the smart money would tell you we're going to retest. Just like we're going to hit resistance, to Joe's great point, on the upside at 2630, 2650. It's likely that we will do either of those things. Now, it's also, the possibility exists that we could have more reactions like we had today. Citi down hard, comes back. We see some positive signs from other parts of the economy, but then you get some downgrades and so forth. Are people willing to put capital at risk for a better return? And if we go down and hurt the psyche of the market by retesting...
Oh, you better believe that would happen, don't you? I mean, it's going to be... If you do go back and retest... And he even talks about, could the earnings recession that drives the retest cause an economic recession? It's not like he says plainly that I'm not an economist. I don't know that's going to happen, but that could happen.
Well,
you're certainly going to get those questions if you do get back to a retest. You're going to get those questions.
Mike's premise, from the way I read this, is that the earnings expectations in terms of growth is not mid-single digits. It's closer to flat. And if flat is the case, then we are going to have a market that right now is trading near 2,600 that is not going to be trading at 2,600. So I think the next couple of days you have to be very judicious and you have to be very patient about listening to what you're getting in terms of earnings and the guidance. And you really want to get into some of the technology names, which I believe would be next week. So I think you've got here probably 5 to 10 really important trading days ahead of you to see if the mid-single digit expectation is reality or not.